Hi, it's Eric with the HIEMIM Africa Fund giving the update for April. The fund was down about 1.5%. The negative return was primarily from our short portfolio. We did reduce our shorts at the beginning of the month, but it wasn't enough given the big rally in the equity markets. The biggest negative contributors were Anglo American, Bidcorp, Skatex Solar, and Kumba Iron Ore. On the positive side, we did make money in Harmony Gold and Naspers. The Dow Jones Titans Africa Index was up about 17% for the month, which is a big move, but it's driven mostly by African gold mining stocks. In the portfolio, we do own B2 Gold and Endeavour Mining, and they've been doing well, but I'm a little hesitant to add to them here. I understand the bullishness on gold, but it's a little bit concerning that other precious metals like platinum, palladium, and silver are all struggling. In addition, we see most commodities are in a bear market versus the US dollar, and we're short diversified mining companies. Overall, the equity portfolio is still about 9% net short. It's tempting to be contrarian and want to get bullish on equities here, but when we do the bottom-up work, we're still careful that these stocks are not really pricing in a longer downturn, a bit more distress, and potentially currency weakness as well. In addition, there's a new dynamic, a bit of a headwind for the stocks, and that's pressure from the governments to help the society and help the overall economy. And that takes the example, an example of that is the South African mobile phone operators have been asked to reduce data prices by 30%. Some of the mobile payments companies have had to offer their services for free to promote cashless societies. And also the banks are being pressured to lend to companies and individuals when I think they'd rather be reducing risk right now. So that dynamic is another downside risk to equities in Africa. The African Eurobond space is also quite interesting. The yields have improved a little bit. They're still high. They're about 8 to 10%, and that is attractive, but I'm a little bit concerned because the fundamentals of these countries are deteriorating quite significantly. I think in the end, the solution is going to be that the World Bank issues guarantees to these countries so they can refinance their bonds at a lower yield. So I think the long-term solution is going to be that the World Bank issues guarantees for these countries so they can refinance their bonds at lower yields. But the logistics around this are difficult, and it's going to take a long time. The IMF right now has requests from over 80 different countries for about $2.5 trillion. So this is a global problem with lots of different counterparties, and it's going to take a while to fix. Meanwhile, with the fundamentals deteriorating, I think it's maybe better to be careful of the Eurobond space right now. So overall, the fund is very conservatively positioned. We have about 29% of the portfolio in short duration U.S. Treasuries. We have a small net short on the equities. We're very flexible about this and willing to get more aggressive, get long. But as we keep looking at things, it looks more like the risk is that what happened over the last 2 months is a very major change in global economies, and we could see this take much longer than we think. And the risk is that after this big rally, you could have a bit of a sell-off in risk assets going forward. So thank you very much.